Hello, hello, hello. Welcome to Outside Trades. Mic check, mic check. Where are the motherfucking effing shorts at? Where are you, huh? Where are you? I think it's time, guys. I think it's time. How you doing? Mic check. I saw a post on Stock Twits. It's like, man, I thought this guy's about to break a rap. Maybe I should ask ChatGPT to help me build a rap for Clover Health. Did I do that? All right, guys, how's everyone doing today? All right, so I'm a little happy, very excited. It's a good day for Clover. It's a good day. We got a 7%. Let me go ahead and show you the screen here. I'm just talking by myself here, right? We got a nice 7% day. It's up, and 5 days it's up 21%. A month it's up 58%. 6 months it's down, up 9%. And year to date, it's up 42%. But max, we're still down. We're still down. Okay. We still got a long ways to go. Okay. All right. Funny idea. Use the Chat GPT, right? Yeah, honestly, you know what? Why the hell not? Right. Let's go ahead and let's do this. Right. And we're going to use Chat GPT 4. Okay. So let's go ahead and let's go ahead and say it. Okay. Let me see. I want you to create a Snoop Dogg style rap for the stock Clover Health, passing its 200-day simple moving average and destroying the short sellers. All right. Let's see. Stop talking here. Let's see what we get. All right, sure thing. Let's do it. All right. Verse 1, right? All right. You know what? I haven't even looked at this. I haven't read it. Let me turn on the music again. All right. Let's go ahead. All right. Let's see if we can. I'm only gonna do like the first verse. All right, let's do this. Yo, listen up, gather around. Here's a tale about Clover Health, a stock that ain't gonna fall. Cross that 200-day. Now we cruising, nice and smooth. And short sellers looking puzzled. They ain't. Wait, what's that say? They ain't got a groove. Shorten the game. Thought they had it right, but Clover Health kept climbing day to the night. 200 moving averages, don't you see? Cloves the stock and the gains, the victory. That's not bad, right? Right, but definitely I should keep my day job, right? Definitely should keep my day job. All right, so I can't believe I did that, right? I'm just trying to have fun with you guys. All right, so let's go ahead and talk about Clover Health posting today. A little late, we already know, but good that they made a post. Andrew Toy's working on his communications, so you got to give credit when credit's due. This is them working on their communication. They're really busy, So they probably waited a week just to make sure. Like, are we sure we're in compliance? Like, are we sure? Okay, let's just wait a week, okay, just in case. All right, so what does this say? So you could go ahead and read all this. This is the big one right here. In light of the positive development, the company will reevaluate its options, including with respect to the reverse stock split and authorized share reduction proposal, currently pending before the company's stockholders for approval at the special meeting of stockholders currently scheduled on 11 a.m. Eastern time, ET time, Wednesday, August 3rd, 30th of 2023. So I don't know. They might, this is kind of saying they might reevaluate their options, but let me just kind of go ahead and just basically, say it, from a perspective of where we're at right now. If Clover Health does do a stock split, let's say, or a reverse stock split, they're doing so not because they are non-compliant. They're doing so because they want something out of it, right? Of course, right? Like, why do it? And I think it'll be good because it will show institutional investors, because a lot of stocks right now, a lot of companies, institutional investors that look at this like, oh, it's a penny stock, right? But all you have to do is just change the amount of shares, and then all of a sudden, it just goes up to $10, $15, and it's the same amount of shares. You just reverse. It's the same thing. And institutional investors are like, oh, okay, this looks good, right? And it's not going to have kind of like that little taste, like, oh, this is a penny stock. I don't want this, right? So maybe that's what they're thinking. Again, it's more like aesthetic. There's really nothing intrinsically about it, right? It's more of an aesthetic thing. Again, the NASDAQ just doesn't want a bunch of pennies in its platform, right? It's not a 99-cent store, right? So, are there even any 99-cent stores out there anymore after inflation? I haven't been to one recently, but I bet you, I don't think things are 99 cents. And if they were, I bet you the quality's gone down, right? So, all right. So let's go ahead and repopulate the screen here. So we went in and talked over this. Let's go ahead and just mention this really quickly. Also, where are the shorts at, right? They're all like, they were just, dogging on the stock. People were telling you, Clover, you should sell it. It's a sell. And if you would have listened to them and you would have sold, which I remember, I remember making a picture of this. So let me go ahead and open this really quickly. So remember, I had a picture of this. This guy sold Clover on June 23rd. And then we had a couple people. Let me go ahead and show this. This was, we had this person sell at a 13% loss. This guy held for 400 days, man. And he sold at 71, almost, it's pretty much 72% loss. This one's 13% loss. This guy held it for 486 days and sold for 82.38%. But then he left a message. He says, high risk. Be careful. It's so sad, and then this person here sold, held it for 465 days, sold for 74.4%. And then, but this guy here says high risk. June 17, I'm curious to see what was the price, right? What was the price? What was the date? Sorry. June 17? Let's go to June 17. So he sold at 85 cents. So if you would have gone, the guy sold, those folks sold at 85 cents. Just like when I told you retail was selling. They missed out on a 58% gain. A 58% gain. How does that feel? Haven't we been preaching the same thing? And then if you would have sold down here, you just, 73%, guys. I mean, in a month. Yeah. Anywho, it's the story, the story never ends, right? And I was honestly waiting for the simple moving average, because now we're technically in somewhat of a bull market. We kind of, it failed a little bit, and then it supported the simple moving average. So that's very strong. And now it's just shot up. I'm hopefully it cools down a little bit tomorrow. There's a couple of orders that didn't go through today. But overall, the stock really hasn't had time to go over the 200-day. But definitely when it did, it definitely looked good. But after the short squeeze at $28.85, almost $29, the stock has just been silenced, right? They were telling you to sell when it was down here, right? So overall, let's go ahead and talk about this. Here's why you should care about Clover Assistant, right? And if you guys didn't, try to understand my joke, yes, a little joke. I posted this I actually took some time on this thumbnail. Who do you think this is? This is Green Goblin, right? Andrew Toy's in there, right? He's controlling the Clover Assistant, right? I don't know. I'm just trying to have fun with this, right? So let me go back to the research here, because we're going to be talking about. By the way, this is our stock terminal. If you're interested, there's a 7-day free trial. It has all of our softwares and stuff. But yeah, so let's go ahead and talk about this. So patients with late stage CKD can experience debilitating symptoms that cause suffering and erode the quality of life. We talked about this a couple days ago. Again, I want to talk about the science, but we already basically talked about this. The biggest thing is this. Let me just go ahead and like it. This one right here, the one with the heart that I liked. Clover Health says, why does this matter? Earlier CKD diagnosis and treatment, right? So more time with better kidney function. So this is better health outcomes and lower healthcare costs. So let's go ahead and just focus on this right now. Yeah, exactly. That's what I'm hoping for. Apple earnings is most likely going to hopefully send the market down, right? So we can bet, I can, get that order filed in. So, it's basically saying that the better health outcomes that Clover has, it's gonna save money, and it's gonna save the insurance company Clover Health money, and Clover Health applies this to not only CKD like GFR. It applies it to A1C, which is the hemoglobin, right? It measures the glycosylation of the hemoglobin molecule for detection of diabetes. If it can do this for colon cancer screening, if it can do this for any type of screening, and it's able to save money on that, then you're going to have an army of Clover Assistant patients that are going to cost less for the insurance company to run, which leaves more profit for shareholders, right? Or AKA for the value of the company, right? And not only are they going to be providing better care, but also we're going to be making money off of that better care, which is like, wait, what? That's a win-win. It really is, isn't it? So there's that, right? And another thing I want to add is other companies and other healthcare providers are going to look at this and be like, man, I really want this. I really, really want this in my system. And we're going to go over some questions and answers that Andrew Toy gave out regarding potentially trying to kind of make this into not a SaaS-like, maybe potentially, but extend this licensing to third, outside of the United States, which it has actually done testing. They just haven't had time to really, integrate it and kind of do the due diligence to do that mass production. But overall, I just want to just briefly go ahead and then go over this right now really quickly. So if we go down to growth versus value, this is a part of our Mastering Stock Market course. There's a lot of things here. I just want to go over here real quickly and talk about this here. So in the above interactive tool, let me just zoom in here. In the above interactive tool, numbers greater than 1 favor growth, while numbers below 1 favor value. So this is obviously, if it's above 1, which is here, you're going to get growth stocks winning. And if it's below 1, it's going to be value stocks. So let's go ahead and zoom in to like a time we're familiar with on this channel. And we can look at the number here. So in 2020, once the Federal Reserve decreased interest rates, it shot up above 1, right? We're looking at 1.42. And growth was favored. And then all of a sudden, it literally nearing the peak, I mean, obviously started falling down here. You could see there's almost like a 1-month lag. So you could have gotten out of those bigger stocks. Let's say November 2021 and then December 2021. So I'm just curious. Let's look at Palantir November of 2021. So November of 2021, Palantir was at $26. So Palantir was at $26. And then we saw the Wilshire, and then that's when you would have known, all right, it's time to get the hell out. And then you can do the simple moving average, right? If you do the simple moving average on this, then you'll be able to look at the 200-day, which is very powerful. And then all of a sudden it basically fell, and then it bottomed out here. And this is good because if you were to draw a support line, you could say there's a support at 1. So value is predominating here. And all of a sudden in December of 2022, it bottomed out. And then we saw this increase. So from December to January, that's basically, you could say, there's a support line here. There's probably a high probability this may be, there's a support here, obviously there. Potentially this could have gone well, right? And if you would have looked at that and done that, you could, let's say, for example, go back to Palantir in the beginning of the year, beginning of the year, and you would have listened to this, then you would have been up 192%. If you would have looked at basically Carvana, you would have been up 1,000%, 10x your money. But then you're like, Al, when have you ever talked about Carvana? Like, whenever you ever talked about this? I've never heard you talk about it. Well, if you go to our Mastering Stock Market course, and if you go to here to short interest, and you click on this, and you go to, no, wait, not this. My apologies. There's like so many freaking buttons. Give me a moment. Yeah, high short interest stocks. If you click on this, what do you see? Number one. What do you see? Number one is what? Carvana. Again, guys, pay attention to all the people that are in the mastering. Definitely pay attention to these, right? Here's your C3I, your AI stock, your AI stock. Look at this stock, right? This thing went up 254%. Look at this, right? But the point is if you got to use all of these graphs in your mind and combine them together to formulate a thesis. Okay, so now let's go back here, okay? So like I told you, in terms of stage analysis, when it's above the 200-day, it's a bull market. When it's below, it's a bear market, okay? So now let's go here, and we graph this, and this is when we were in a bear market. This is a screenshot back in April of 2022. Now, if you want to get the updated, there's a link right here. You can click on this link, and it'll take you to this graph, which is the most up-to-date. You can see right here, by the way, this is growth over value. So we took the simple moving average 200-day, and every time the 200-day, the price action is above the 200-day, growth wins. And if it's under the blue line, value stocks win. So if you, let's say, for example, see that it crashed here, you can say, whoa, I want to go ahead and I want to buy value stocks. What are value stocks? Stocks that have free cash flow, that give dividends, and all these different types of things. And if you looked at the video I published back then, I said, hey guys, ExxonMobil is probably a good company to get into. You can find it on YouTube, right? And if you were to look at ExxonMobil from October of 2022 till, let's say, October of 2023, let's go ahead and take a look at ExxonMobil, and let's look at the 5-year. Here's October. Oh, no, wait. Here, where the hell is it? Here's October of 2021. And then look at this. Look at this. An 87% gain. An 87% gain, right? But then now we have, this is the one here. Now we have it crossing the blue line, indicating it's growth's time to shine. And if you can look at the date here, this is in April of 2023. So you can say, okay, well, if it's growth time to shine, this is going to be almost like a risk-on environment. So let's say if we didn't even look at Carvana here and we didn't see that there was a high short interest and that shorts had to cover because they were losing money, then you would just say, you know what? I only looked at this graph. This one here, and April is a good time to get into those risk-on stocks. So you can go into Carvana, which is $51, right? It used to be seven, right? And if you go to April of 20, let's go ahead and go to a year. And like I said, April is when we had risk on, right? It crossed the 200-day. And again, like I said, bull market, started having a bull market. So let's look at April 2023. What was the stock price of Carvana? April of 2023, it was $8.14. So even dropped even lower here, but let's call it $8. If you would have looked at this peak to trough, that's a 566% gain. Okay, I'm showing you guys this, and obviously you can do an intrinsic value calculation on this. I'm showing you guys this because I'm trying to teach you how to use our Mastering Stock Market platform. There's a lot of gems. We're almost at a point where we just got to implement the video analysis. We're going to combine all this information and create a class in the Mastering to show you how to utilize all this data. And guys, let me tell you something. You are going to be ahead of more than 99% of people. I'm telling you, not even some billionaires know about this. They just have a bunch of smart people do it for them, right? I'm telling you right now, you guys are going to be so successful with this, okay? So now let's go ahead and just leave it with the research here. So we can just go ahead and read this really quickly. So for the bullish streak for the S&P 500, the 200-day moving average has risen 40 consecutive trading days. Historically, this pattern precedes above average returns across all time frames, okay? And the S&P 500 was 92% higher a year after such win streaks. So you can go ahead and read the rest of this, but the biggest one here is the 2 composite TCTM composite risk warning. It basically shows that it's unlikely that we're going to get a correction. Now, if I was to see if I can search the Research Edge channel here, and I can look at former times I've used the this was, yeah, I have to take a look at, give me a moment.
Composite risk warning.
Let's see if I can find it. If not, I can't find it. We'll just have to, we'll just look at this later. I'll show you later, but it's a really cool indicator that looks on if we're going to get a correction or not. It's really smart. Okay. But overall, guys, I hope this was helpful. Let me go ahead and let's ask some questions. And if you like this video, go ahead and drop a like, right? And if you don't like the video, click on the dislike button twice. Okay. Make sure it's twice. Right. All right. So let's go ahead and ask let's see, answer some questions here. Yeah. IRP for the shorts. Hell yeah, absolutely. Let's see here. This is on the internet forever. Congrats. I know, right? It really is. I know, right? Why are you trying to poke the bear with this live stream? Well, let's poke it. Let's poke it. It's time, guys. It's time. That's awesome. That's awesome. Hell yeah. I know. I'm very excited. All right. All right. All right. Well, that's it, guys. It's always a pleasure to have you on, and I will see you on the next one. Let's go. Oh, wait a minute. I got one more comment here. No correction this year guaranteed. I can assure Al's going to be on the money. Thank you for your service, good sir. Now, hold on. This is what the research is saying. We could get a soft landing. You know what? Time out. We're not done yet. I forgot. I forgot one thing. Hold up. All right. Bill Ackman just basically shorted the 30-year treasury, indicating that he wants it to go down. And if it goes down, the yield will go up, meaning that he believes that interest rates are going to go higher. Warren Buffett actually bought treasury yields, but more short term. So what I'm trying to say is maybe Bill Ackman sees something that I'm not seeing. Potentially there might be, we may even get it. We may be all wrong in this, and we may be getting into a really prickly situation. But regardless, Clover Health fundamentals is actually getting better. And it's going to become free cash flow positive in 2024, right? At least my calculations, right? They're saying 2023, and I don't agree. All right, now we're good. We good? All right, let's see. Let's see if we can do the rest. Passing lines, crushing shorts. We the bomb. Clover Health, baby. Movingstrong.com. 200-day SMA ain't no mystery. Investors cheering, we're making history. You know, I haven't even read this. I'm just going off of the 1 year, right? Short sellers, quacking portfolio shaking, investing in Clover Health, no mistake, ain't faking. Up and up we go, no brakes, full throttle. Cloves the choice, it's winning the lotto. Health game strong, helping folks all day. Clover Health stock ain't no child's play. All right. I feel it. Huh? All right. Look at the numbers. Feel the beat. Short sellers running, retreating in defeat. What is this bridge? Oh, okay. This thing's doing the bridge. Okay. All right. Snoop, D-O-double-G. Let me tell you what I see in investing, growing, flowing, knowing where they got to be. Clover Health's the name. Breaking freeze the game. Destroying short sellers ain't that a shame? Oh, I totally agree. Horrible. Passing lines, crushing swords. We the bomb. Clover Health, baby. Movingstrong.com. 200-day SMA ain't no mystery. Investors cheering, we're making history. So if you're in the game and you want a sure win, Clover Health's the choice. It's a stock with a grin. Short sellers best beware. Don't you ever doubt Clover's the stock. That's what we're all talking about, okay? I guess for sigil. No, this rap is a work of fiction and entertainment, and it does not represent any investment advice or endorsement of a particular stock. Always consult with a professional financial advisor before making investment decisions. That's very good, GPT. All right. Peace out, guys. Always a pleasure, and I'll see you on the next one.